Okay, thanks for your patience. Good evening, guys. Ken at Tortoise Capital with a strategy podcast for August 27th, 2020. Pardon me. All right, let's see what we got today. So, yesterday was a decisive move out of the Z1 to Z2 channel. So, price we had talked about during this long bullish move had stayed between the Z1 and Z2 all the way, and then yesterday had a decisive move to the upside and closed outside of Z2. So the concern was it could be the beginning of a runaway move that would take it up to Z3, or that might have been sort of a parabolic move that would then get smashed and then come back towards Z1, the PSAR Bollinger Band mean. So we talked about a desire to where would you lock in gains? And what we talked about yesterday was either the one-day low. Oops, let me make that red. Sorry. We talked about either like a one-day low or halfway up the stack or at the edge of the dragon. And so halfway up is where I went today, and it held just barely at that support. And what we had was a slight gap up. Sold off in the morning, made a push to a new 10-day and 30-day high at 350. 350, unbelievable. And then sold off to essentially turn in a bit of a doji-like action today. So we had a normal-sized range from high to low, and then the open was just about the same as the close. So that feels like a doji to me, as in addition, a potential turning point at the top of this nice long move. So we've got this nice long move here. Which featured this exceptional move past Z2. And then today we got what would be, if this was perfectly symmetrical, it then wouldn't surprise us to see a move back towards, say, the Bollinger Band mean, something like that, which would make this a perfect turning point at the 12 o'clock position. Now, what we can see, though, is it did not fail. It did not make a new low. It held halfway up yesterday's gains, and it finished above the Z2. So that's actually a favorable sign that it didn't fail today. And it actually did make a measurable additional move to the upside. And we're going to see that some of the leaders that really were thriving yesterday gave back today, but other members of the team kept pulling it north today. So I actually consider this on net to be a favorable day, psychologically speaking. It did not fail through the low of the day yesterday, or even halfway up the stack. So what I'm going to treat this, I'm going to treat the daily low at which looks to be about 346, right? Yeah, the low of the day here was 346.53. Says the symbol up top. So 346.53. I'm going to treat that still as a reasonable stop point, and the reason is that if we had some kind of price action like this, where it did not make a new high and then broke down below today's low, then that would be like today's bar would be bar 1, and then this one would be bar 2. And so I'm going to take, I would take my exit at that 346.50 price level. That's where I will get out tomorrow. So I'm going to make this my stop level. That's my line in the sand, if you will. Now, to the upside, we're already north of Z2, so the only place this thing can go on the upside is really as far as the enthusiastic young people want to take it. It's already made a new 10-day high, so if it can get above 350, this about a 1% move would be about an ATR. So that's how big that move could be. So if it opened here, this thing could get to like 351 tomorrow. If it gave a double size move, it could get to almost 355. Those would be upside targets that we might hope to see tomorrow, here or here. That would be a 1% and about a 2% move, respectively. Now, to the downside, support levels that you might want to consider. We would be looking at, so 350. I would say the baby dragon at 345. The upper skin of the dragon, 343 and a quarter. The spine of the dragon and Z1 between 341 and 340 and a half. So I would consider that to be pretty strong support right there. We just treated that as the next, skin of the dragon, spine of the dragon, belly of the dragon. All three of those, and the belly of the dragon is really tomorrow's PSAR as well. So that would be, if you didn't like 350, if that felt too close, then 343.3. Z1 would be 341. And the bottom of the dragon at about 339. And that's also the PSAR. The 10-day low at 335 and a half. And that was set like 5 days ago. Then the Bollinger Band mean would be the next support level to the downside, 332. To me, given back that much, letting it come back that much to the Bollinger Band mean, just seems like too much. I can't see a reason to give it that much room to work, because you're already well past the 10-day low by that time. So those would be the support ones. The thing that, the final, that was the Bollinger Band mean is about a 15-day low, and Z1 is way back here beyond a 30-day low. And then the 30-day low is all the way over here at 319. That would almost be, if this is a 5% sell-off here to the Bollinger Band mean. A 10-day sell-off would take, a 10% sell-off, that correction, would take us just below the 30-day low. So again, I can't see giving back that much. I'm willing to give it this 1% right here. And then this would be 2.5%. So let your conscience be your guide. As another way to think about this from a psychological exit point of view, Always time for a quick lesson here. I like to think of these things in different phases. So if this is a speculative, that first phase, you know, then what I have is the Wu Wei exit and the initial stop, and that was just the speculative. Maybe it was a PSAR for a day trade, and maybe it's 2 times ATR for a swing, and that's capital preservation. The PSAR and the 2 times ATR for swing. So this was, we were stalking this, and there was some pattern over here that said, this might be worth trading, and that it has a positive expectancy pattern. And so there's some little risk box that we put in here, which is enough to justify that hypothesis. So according to the particular hypothesis, there's some minimum manageable risk box, and that represents our initial bet. Then the next one would be something like, if we moved it to no lose plus dinner for 2, then what we've done is we've improved our position, and we're not going to lose. That feels like an important psychological stage. Then between no lose plus dinner for 2 up to the average, there's one of those like, hey, maybe this thing is actually working, and I'm just going to use my standard Wu Wei or a trail. And if that works and it gets past an average, then for me, this is another little psychological moment. I like to set up these little firewalls so that once this trade gets from out of this, it's less than average, but more than not losing. So it's made a little bit. Maybe that's like a 0.4 or a 0.5. Because if my average is, I set it equal to 0.6, we're talking anywhere like I guess that could be a 0.3. Let me clean that up a little bit. This would be something like a 0.3, 0.4, 0.5, kind of in that range. This one is probably a 0.1 or a 0.2, depending on how you set that up. But we're not going to lose money. Once it gets past about 0.6, remember, we're holding on to like 2 execution risks. And I do not like to let something that's greater than average fall back to below average. I'd like to at least stop it here and turn it into an average trade. Then at some point, it's exceptional. I would say like greater than 2R, in this case, 2 position sizing R, which would be something like 10 execution risks. So generally speaking, I don't mind keeping like 2/3 of an above average win. That could be something where like I'm at 0.9, and I would give it 0.3. I'd be willing to give up 0.3 of that as long as I could lock in 0.6. And if it was 0.12, or I'm sorry, 1.2, and I keep 2/3, then I want to keep 0.8. And if it's 1.5, I want to keep 1.0. So I'm keeping that, I'm sort of respecting that 2/3. Once I get past about 2R, though, this is really exceptional. I want to keep more. And so instead of just 2/3, I might want to keep 3/4 or 4/5 or 9/10. So I want to keep maybe 75% of an exceptional win, or 80%, or 90%. So in those rare moments where we really have an exceptional one, I'm not willing to give back a full third like I was on this simple above average, because the law of large numbers and real dollars, 10% of a great big win feels like I'm giving back too much. So there is sort of a psychological profile of regret. Now, what matters on this one is the purpose of these firewalls. I'll just call this the firewall. The firewall flashcard, if you will, is to minimize regret on big wins. When I was a young man, if I had a 30R win and I gave back 10 and I could still come out of there with 20. I mean, think about that. Think about you had 30 in hand and then you let 10R slip away and you try to console yourself with the 20 that you kept. Yeah, for a while, that 20 is going to feel amazing. But after a while, that 10R, when I start taking a look at how many risks I could have taken in the future, I work so hard to make fractions here, it just feels like giving back 10 is wasteful. So there's at some point for me, when I get beyond 2R, I start trying to think about how can I start locking in more of these gains. Another way to look at that is that as this thing goes up 1 leg, 2 leg, 3 leg, I'm much more likely to, implement a sniper save up here to lock in these first 2 legs than I am down in here. This just feels like wu-wei exit here. But if I got a 3rd leg in, I'm much more likely to put that sniper in. And so at a minimum, this is up here by the, when it goes beyond the average win, I'm thinking about get the sniper in there. And then if it gets beyond a 2 position sizing R win, which is a 10R win, then I am certainly going to activate, maybe this is an extra manager or super manager or command override, we might think of that. So think your way through that challenge. I mean, this is a problem that you want to have, but don't wait to have this problem to start thinking about it. There will come a time when you're locking in all these exceptional gains, something greater than 10 execution R. And you want to think about not just capital preservation, but almost think of that as a windfall gain. Windfall, something you weren't even entitled to think you could get, but a windfall preservation, to maximize the great big winners and to give real respect for the fact that you bring it in. That's like if you were out hunting seals and then all of a sudden you got a whale, you wouldn't want to be wasteful with the whale, because how many whales are you ever going to get? If you get a whale, you can feed the village for a year, as long as you're not wasteful. So just because there's so much there, don't let that get away just because it's bountiful and plentiful. That's 7 years of abundance. There's 7 years of famine coming, and what you did with your gift of the outsized returns is going to matter. So I wanted to say that about minimizing regret and some of the psychological states of these firewalls. The initial risk, no lose plus dinner for 2, routine management of below average trades, the above average trade in the firewall, the exceptional trades, and then thinking about activating these windfall profits preservations. Okay, just don't give back so much and then later on live to regret that. Just because you're flush with money, I mean, that's the problem with guys that win lottery tickets. It changes the respect they had for the individual dollars, and then suddenly they wake up one day and it's all gone. So be prepared for what to do before it happens. Okay, that's what I want to say about that. And I say all that just to say that this feels like one of those where that exceptional move that moved out north of 2R or Z2, and then a warning sign here, and then that's where I want to preserve all of the joy that we earned in this grinding northward move. I don't want to just say suddenly, oh, I'm just going to let it come all the way back here. That's 10 days worth of pain and suffering that you're willing to give back just because you had 2 days of rapture. That doesn't feel correct. You know, like I don't want to, just because I had 2 days of joy doesn't mean I want to give back, you know, the 10 days all the way back to here. Just because I had this little bit of joy and hope and greed, and I'm thinking about, yeah, it could move up to here. Yeah, I'm not going to let it go below here. So send me a note if that was helpful. It feels to me like it was. All right, let's take a look at what worked today. Excuse me. All right, so let's start with our indexes first. So the S&P at 0.22. Let's see, where's our small caps? Unlike yesterday's sell-off, they were a little bit optimistic, but not more than the market itself. And then the Dow large caps actually were the bigger winners today. So yes, this is the a difference from yesterday where the S&P was the big winner and the Dow was in second place and the small caps were suffering. Today, the large caps were a big vote up, and then the small caps, the speculative market players, were at least as happy as the market. So that's an improvement in their psychology. All right, so let's take a look at the sectors that did better. And so we'll start with Brazil. We'll just lump all three of those together. Brazil, healthcare, and oil and exploration coming in between 0.7 and 0.9. Finance, which got smashed yesterday, was up big today at 1.69. So when the market is only 0.22, but finance was 1.7, well, that's pretty good. Simon Property Group, representing the commercial real estate, 1.9. And that's really it for the sectors. So it was finance plus a few individual names. So let's take a look at some of the individual names. We had Devon Energy, 0.56. Caterpillar, 1%. Nikola, 1.2. Boeing, 1.3. Goldman. So now Goldman is interesting. Now, normally you would say, yeah, well, Goldman's, hey, that's awesome, 1.4, except it wasn't even as strong as its sector. Salesforce, which started the day selling off, had almost a 3% intraday intraday move to recover to 1.47. That's very healthy, very strong. Win the speculative at 2%. Microsoft key leader 2.4. Second day up for the VIX, so that threat to volatility, that's that defensive play once more. Tesla 4%, and then Walmart for the big deal of the day at 4.5. Now, for those of you that were listening yesterday, I spent probably 10 minutes talking through Walmart and all the reasons why that was a possibility yesterday. So we're going to look at that trade frame here in a little bit. So of interest here, it's the only sector that was any good today, finance. Everything else was just ones and twos. So let's go take a look at what suffered today. Basically going to be everything else. Okay, so the energy sector was a fraction lower than the S&P at 0.2. Technology basically flat at 0.8. We're going to lump in clean energy at minus 0.16 and materials at 0.27. There is consumer discretionary minus 0.5. Emerging markets minus 0.8 along with oil. The FANG leaders, Facebook, Amazon, Apple, Netflix, Google, minus 1% essentially, along with Japan. There's Mexico minus 1.3, silver minus 1.6, treasuries still suffering minus 1.7. Wheat and precious metals minus 3%. So the market was fractionally up today, but look at the profit taking in some of the great big names, starting with the FANG companies, right? We got Facebook minus 3, Twitter minus 1.6, Amazon 1.2, Apple, Nvidia, and Google all more than 1%. So except for, in the tech sector, the only really good news up here was Microsoft. So Microsoft was amazing. Tesla was amazing. But all of the other tech joy, was down here suffering. So, and then in the world of the triple tech leaders, so TECL, which is 3 times XLK, so XLK was up 0.08, TECL was up 0.26, so that's like 3 times the broad tech sector. XLK is the broad S&P sector. But TQQQ, which is top heavy with these guys like Google, Nvidia, Apple, Amazon, Twitter, Facebook, TQQQ was down 1%. So that's the case where the broad sector was better than the tech leaders. So you got to be mindful of interpreting this. Are these the tech leaders that are on 1% sale, or was this the part of the turning point where the things that have been dominating gave back more than the broad sector? So this is what where leaders are now suffering from profit preservation. Of course, we don't know that. We'll see tomorrow. But that's certainly one of the themes. The materials sector, just not good. Here's our metals. There's U.S. Steel minus 2, Cliff minus 1.8, Alcoa minus 1.5, Nucor basically flat. So that's not helpful. Even Home Depot gave back 1% today. So I look at this. This does not fill me with a lot of enthusiasm for tomorrow. That's why I think when only finance was contributing to any gains today, finance is what contributed to these fractional gains. But the fact that there was not a lot of follow through in the key leaders, I worry that this upward movement is at risk, and the fact that we're at Z2 and we're so far above the Bollinger Band mean that more sell-off happens through here. That's why I'm just going to cut it for me right here. I'm not going to wait and see if it holds support at all these levels. In fact, in this space, I'm going to call this kind of the yellow zone. As I think about this space down here between the 10-day low and this little and the 1-day low, between the 1-day low and the 10-day low, I'm going to treat this entire space as an opportunity to buy on dips. So I'm going to take my exit at the red dot, and then if this thing does sell off this far, I'm going to be tactically happy about that. I'm going to look at all of those sell-offs as opportunities to buy strength on a dip. So what does that tactically feel like? Well, if it sold off this far and then rebounded at the edge of the dragon, then I certainly love that. But I would also do that here. So I'm looking at each of these as support levels that could act as a springboard to go back up until. So I'm going to have a long side bias on all of those support levels until it gets to the 10-day low. Now, if the 10-day low breaks, then and only then do I really have a significant downside bias, because I want to be short starting at the 10-day low so that if it comes down and tests the Bollinger Band mean and breaks, that's where I'm going to put a second position in. So let me draw that red arrow as something like a yellow arrow, okay? So I would take that weakness as a, staging for a tactical opportunity to the long side. But if it breaks below the 10-day low, then I'm going to pick up, my bias will shift to short. And then if it breaks the Bollinger Band mean, I would have 2 short. And then if it broke below Z1, I would want to have 3 short. So as you can see, I'm spending more time managing risk here than I am worrying about the upside, because I know how to get long in here. I mean, I'll just get long for sure if it breaks to a new daily high. So I want to be tactical intraday inside this yellow zone. Like I'd like to see it open here and then just go right through the high of the day. And, I would be long one to there, get my second position here. Sorry. And I'd try to have a third position, at something like 355. So those are separate and distinct psychological postures. I would be optimistic in this yellow zone going north. I would be ecstatic if it broke above the 10-day high and a 30-day high. That would be ecstasy. This would be tactically opportunistic, waiting for a rebound off these little springboards of support, which have worked in the past. Like this one got to the bottom skin of the dragon and rebounded. Awesome. This one got to the edge of the dragon and rebounded. Awesome. So if this thing sold off to the edge of the dragon and rebounded, I can't be surprised by that. It's happened all these previous times. So I'm ready for that to happen. And the strength of the previous move is the justification for that planned response. But if the 10-day low were to break, then you can be sure that these PSAR levels would break, and we'd get a PSAR flip, and then that sort of tells us that's going to be a RLXD, and that thing's is going to be one of those. So that's the way I'm going to play that. Okay. Let me shift to so to review yesterday's Walmart trade frame. We liked the move in Walmart up here beyond Z3. Look at gapped up, broke out above Z3, sold off, sold off, sold off, all the way through the Bollinger Band mean, all the way down to Z1, and then it held. These 2 days actually, showed a little bit of buying pressure, but it didn't follow through. So it gave one urge up and then sold off again, but still held support at that Z1 level 2 days in a row and closed strong. So we set up this risk box here's our little yellow zone trading with about, call it about $1 of risk approximately. And we're ready to play a trade out of here. We'll trade it tactically with hybrid frogs in the yellow zone, but if it breaks to a new daily high, that's where we would start picking up the long side trade. Right? So we'd want to have one long here. I considered getting a second position long on a break back above the Bollinger Band mean. I considered a third position if it got above Z1, a fourth position if it got above Z2, and the PSAR. That's where I would be thinking about building these multiple positions. Okay, but at the same time, if that collapses, that's the easiest trade of all, right? Because that feels like breaking through this whole support level here at Z1 was 5 days that it didn't fail. But if it failed below that yellow box, well then that's just not good. And part of this reason is this, all the way over here. That was the original discretionary box before, that if it were to break below here, we'd have been happy to go short, but instead, it gave upward pressure, didn't it? And then this peak feels very much, especially as out of Z3, that feels like that perfect turning point. And then what we saw is from that turning point, it gives a symmetrical move back to the downside where it's now in this critical state once more. Well, that's the same pattern, in my view, as this turning point here in the S&P. When we look at the market, this turning point right here, only this is happening right now, and in Walmart that happened 7 or 8 days ago. But that's what that topping action feels like. It's got that far and no further. So I'm not going to let this come all the way back down. Like, I'm not going to let this thing come all the way back down to here before I get out and give back all that hard earned. No, that's why I'm going to put my stop right here. And then I have planned actions at these support levels. So that is exactly the same mentality that now I'm doing with Walmart, only Walmart had already experienced its peak turning point, has sold off, came down to this to that support level. And we're wondering, is this 5-day level of support here, is that like this 5-day of support, which then triggered a move to this high? Is this going to be support and go up? Well, if so, that's what my trade frames look like. Or is this critical state going to resolve to the downside? I don't know. I'm going to get short 1 there, and then I would be short 2 here, which is nice, right? Because that's a break of the Z3 line and a break of the long-term fair value. So I want to have two short right there. So that's the basic trade frame I was looking at for yesterday for Walmart. And then if we're just trading the daily chart, this is what we get. We get a breakout and a hybrid frog box move that if we just followed our rules, we could buy that. Or if you want to wait to this one, fine. First position, second position, third position. It wouldn't offend me if you'd taken a fourth position at the Z3 break and then ride it all the way up to 139 and some change. And then you tell me how much of that you want to keep. If this is the peak, you tell me where you want to stop. Do you want to stop? Do you want to stop? Do you want to stop? That's not okay. There, stop. So if you think about it, we're with about $1 of risk, you're getting long at. Let's just figure this out. Shape. Let's just count the R's using the daily range risk box. So there's 1, 2, 3, 4, 5, 6. So the entry, let's just assume that you taking this entry, that first, take this one. So that first position, and we'll just move all this stuff up one. So from the first green line, if you're just using daily bars or hourly charts for that matter, that first position gains 1, 2, 3, 4, 5. The second line gives you 1, 2, 3, 4. Third one gives you 1, 2, 3. So that's 12R. And using that much as slippage. And so if you're holding 12R, how much of that do you want to hold overnight? I would cash 10 of those and keep 2 hours worth of gains, and then keep that as the swing trade overnight. And that way I've banked 10, and that's consistent with what I said before. Yeah, Lisa asked me two ATR. Yeah, ATR 14 Wilder. Yep, standard default. So now let's take a look at this one in two dimensions. The first one was just swing trade 1 day at a time. I'm just using daily bars, range risk, and a Z-score ladder to add. And doing that with an initial risk of 1, this thing, whatever, gave us 12. Well, that's amazing, especially if my average is 0.6. That one trade that I got 3 positions into was 20 times better than an average trade. So that's one that I may not want to give back 2/3. So I decided, let me make bank on 10 and then keep 2 for the overnight trade. All right. So that's the method of doing swing trading 1 day at a time. Because remember, I was ready to play that as a swing trade. And if I could get a couple R out of that over the next 3 to 5 days, I'm pretty happy. But I got 12 inside a single day on a move that went well beyond Z3. What happened to Walmart the last time that it did something like that? Oh, we have an example right here. It made that move beyond Z3 and then spent the next 7 days sucking and came all the way back here. So how much of this move do I want to let come all the way back here? All I know is that the last time it was at that price level, it sold off this much. It sold off that much that fast. So I don't really want to give back that much. And it's already given back some of that already, just in this move. So I'll just cash 10, keep 2, and I'll watch that one like a hawk tomorrow. What do you mean a hawk, Ken? I mean that tomorrow I'll put a stop in. If that's where it closed, I'll just put the stop in at the previous Z3. I'll just put my stop solid right there. And so all I'm really risking is about one of those execution boxes from yesterday or from today. So if that's one execution risk and I'm keeping 2 in play, that box right there represents 2 of the 12 that I'm willing to hold. So I'll just hold that. Now, I'd like it to get better. I would love to have it go better. So where would I add a second position? Right there. At about 138.75-ish is where I would look to. Oops. That's where I would add. So I'm really kind of treating this whole region in here, as a yellow zone. So I've got 2 units of risk already on it, paid for with today's gains. So I kept 85% of the gain. I kept 10 out of 12, which is 5 out of 6, which is 85%. So that's an example of me keeping more than 2/3. Like if I was just going to keep 2/3, I could have kept 4 units of risk on that, but that just felt too much. I wanted to honor and respect the move, especially in Walmart, for crying out loud. I mean, Walmart. Now, that's the side of the equation if all I'm doing is using an analysis of the swing trading one day at a time and just looking at the daily bar analysis. So I can now look at this also from a turbo trade. Which is going to feature intraday technique. By which I mean, patterns and the MACD and the 1 minute charts and the supported spring crossing and all that jazz. 1 minute chart, hybrid frog box, minimum manageable risk box, MACD, Wu Wei exit, sniper, and all that crap. Yeah. All that stuff. So here's what that trade looks like. That's yesterday's boundary. Here's a minimum manageable risk box. So you can see that I'm using that in all of these. I'm using basically 50 cents. So the daily chart and the range risk, I was using $1. On this one, I'm using something like 50 cents. So the first one, and oh, by the way, these 3 green lines, these are the same 3 green lines that we saw from here. That's this line, and this line. The mechanical trade frame lines where I knew I wanted to add, like if it got through here, I knew from yesterday's trade frame that I wanted to add positions and go long if it could get through those. So when you drill down and look at these, that makes these decisions robotically easy. So here's where it closed with the VWAP here. It opens, it starts moving up through, there's my green line, and it's moved a risk box off the bottom. So I just buy it. 10 bars later, marginal comes all the way back to the VWAP and starts to fail. Exit. It comes and finds support at yesterday. This whole line right here is yesterday's yellow zone. That's the top of yesterday's yellow zone. And so here it finds support. It moves a risk box off the bottom. I buy it. It moves up. It comes back. I take a sniper exit here on the PSAR just to help offset this loss. So now I'm flat for the day. It bottom ticks me, moves back up, PSAR flip, and fail all the way back to the VWAP. Okay. So now I'm down a fraction. It gives me this P3 or a Z3 pinch. It held support again at the VWAP. I just buy it after a risk box off the bottom, and now the Wu Wei exit. Oh, this one works. It gives me my second position here, which was the third line, 1, 2, 3. After this tactical hacking around in here, I buy the Z3 breakout near that second line. It gets to the third grade line. I buy the second position. It moves up another little fractional piece. Now by this time, I've got my 2 positions in. right? I've got position 1 and position 2. By this time, the Wu Wei exit has now moved me up here, because remember, I'm 1, 2, 3 dots past my entry. I got my second position in. I've got it locked in. Pick up the Bollinger Band mean. It gets this far. So after this little hesitation, and it gives me this move, I mean, I was tempted to put a third position here, but I did not. I was bruised by this. And the fact that the rest of the market was not really following through much, I was content with just having 2. But having only 2 positions in, by the time this thing, the Bollinger Band mean is accelerating right along with the PSAR, this little sell-off, to me, I sniper, and then I pick up, the rest of it is the manager. Well, this time the sniper got bottom ticked, and then it crosses. So I put one back on, sniper, and now finally the manager exit. So if we just call this whole piece in here basically flat, I mean, it's too close to, the size of that is not as significant. So that's one risk box. So on the first one, 1, 2, 3. So 3R on the first one. We'll say that first one took the sniper. The second entry got 1, 2, 3 to the sniper. This one took the man. So 3. So maybe 5R. So this is 5. Sorry. So this is 5R intraday. But remember, the execution risk was 50 cents. The execution risk over here was $1. So that means the position size on this was twice the size. So at $400 of risk and a 50 cents risk, that's 800 shares for position size. Whereas this one, $400 of risk with $1 of risk is only 400 shares. So while this one returned 20, this one gave me 5R. That's really like 10 more R. So this is a case where the swing trading one day at a time actually was better than the turbo trade. Just worked out that way. But one of the advantages of this thing was I only had to study that one symbol. So the big deal of the day on this one, trading in 2 different accounts, one of them had, one of them was using the daily bar in that trade structure, and then another one was using this, the intraday framing. What this doesn't show, this was only, and this was that 5 execution R just up until lunchtime. So remember, this is at 137. I thought I had that already opened. That's right. Anyway, the afternoon trade on this one, as we know, yeah. So the turbo trade ends up taking that exit around 136, and then there was another afternoon trade that added another $4 onto that. So there was much more opportunity later in the day. But I just wanted to show, the difference in complexity that comes from doing these kinds of this kind of daily chart analysis is what keys you into key price levels. And then this trade has relatively less complexity because you're just using the daily charts and those price levels and where you can safely add and having relatively wide stops. Whereas this style of trading has bigger position sizes, but has a lot more activity, but has potentially, greater rewards in here. Like if I get that third position here, then this becomes a massive goodness. This thing gave us a stop and reverse and a resumption of this trade back up this way, all the way up to 140. And so there were some good gains in Walmart all day. So that's just the kind of day it was today, though. My concern is that all of the usual suspects are down here. All those FANG companies, all the easy ones to believe in, are all below the line. And that really it was Walmart and Tesla and Microsoft today and not much else. So that's what I want to say about that. So the difference between core and turbo. All right, so this one's from Bill. And this is another example of swing trading one day at a time. Should be working with me here. Come on. Try that again. There we go. I have to take the screenshot and then open it with ink in order to get my little sketches on. Thank you for your patience. All right, so here's Bill's context. Gold was on a weekend report. It is very liquid, and it's volatile enough to trade, and so he's going to pull 3.5 R out of this one. Here was the Z3 pinch at yesterday's close. That's the open right here. So he can take this as a MMRB. At the open, it gaps down. He has a MMRB. He buys the supported crossing here. And he follows the PSAR all the way up and takes a sniper exit. He lets this fall a risk box all the way down, gets the PSAR flip, buys the RLXT, straight PSAR, only gives back that fraction. Like this one only gave back that fraction. That was amazing. He's not even trading the short side. He lets it come back. Notice how it found support at the VWAP. Support at the VWAP and the RL10 reverses. Here's your PSAR flip. There's your crossing of the dragon. There's your wrist box. All the PSAR up, he takes the sniper, exit, and off you go. 1.25, 1.21, 1.09, 3 little bricks, 3.5, standard work. And that size of that wrist box, trying to read that with my old ancient eyes, that looks like about probably 30 cents of risk. So nice work from Bill. I like how he's that color scheme he has really makes that Red River stand out like a big fat blob. And I would just say, notice where his entries are when you look at the seasonality. Here's one winter, it just turned to spring. He gets it, and it's on the south side of that Red River. The second one right here at the turning point. Third one right here at the turning point. So, and notice how well timed this exit is with the rolling over of the winter, crosses that little, like a baby dragon almost. And this exit over right here. The run is done when that summer rolls over. Growing season is over. How much more do you need to know? The name of the application and trade. I'm not a TradeStation user. It's just a moving regression line. You can program that in. We've got that TradeStation bundle that Bill Brower has assembled that has the full implementation of the entire RLCO program and all of the indicators. So I know it can be done. But I think he just programmed it in the TradeStation easy language with a moving RL10, the moving regression line. It's also called the least squares moving average. Okay. And then you just do one for the RL10 and one for the RL30. That gives you the RLCO. Okay. Nobody did kata today, so we'll finish up now with the daily report. Thanks for your attention. We'll go. Okay, we've already seen the daily health check, I should say. Still significantly overbought. Still bullish quiet. That favors the upside. ADX is an amazingly strong 38. ATR percentage, 0.89%, still very quiet. The risk Z is still declining a little bit. It's warning us about possibility of sharp volatility spikes to the downside. We're seeing those purchases already being made in VXX. The non-technical guys are at the 10-day min pains. There's Chevron, Boeing, Apple in the max pains for the Dow. There's Devon Energy, ExxonMobil, Conoco, and Schlumberger. That's how bad energy has been. Handful of dojis today. Chevron signaling a pretty good structured trade. Walgreens setting up nice. Anything else of interest? Yeah, breakouts in Disney. Microsoft, man, it doesn't have any patterns to trade, but man, look at that price action in Microsoft. How nice. And the same in Visa. And the finance sector was strong today. And so there may be some more room in Visa. ETF tactical, just 2 dojis. In energy, which tests out well on the auto framer. And in oil exploration, also on the auto framer. I like gold as channeling and triple screen, even though it lost money today. Bill was able to pick it up on those intraday bounces. Treasury still signaling channeling. And it's troubling that it made a breakdown of the 10-day and 1 month look back period. I got to get some hedges on my longer term core position in treasuries. Breakouts in the S&P, in the Dow, in consumer staples based on the strength in Walmart, and in the Dow. Mexico also had a breakdown on its 10-day, so that could be a tactical play for the intraday hybrid frog. That's on my short list. Only Apple and tech exceptionally strong. GE and Verizon's are coming up on the compressed pinch boxes there. Some nice auto framers in the energy sector plus Walgreens. The daily squeeze is IBM and Cisco, and then just the next one's in the stack, even though they're not more than 2-1, but Verizon, XOP, Intel, Johnson & Johnson. And that's all your mechanical trade framing data over here. Lots of symbols drifting back into the fall, only a handful maintaining that surge. That's the sign of an aging bull, by the way. When we saw again today that there was only one sector that was better than the S&P, that says that the broader market is faltering, and that was another reason for me to take a tighter stop position. Here were the big winners and the breakouts today. Look at the Walmart 444 on the 3-day NDX. Wow. Treasuries in Mexico is where the weakness is, and Japan as well. And Nike is bucking the trend of the Dow. So that may be the place where what had been formerly pretty good, it's been exceptional on 30-day, 90-day, 270-day, but on the 3-day, it's just it's starting to punk out. Yeah, everything else in normal. That quiet volatility has just kind of bottomed out right here. And now, the last time it was that low for that long, that's how quickly you get the volatility spike. So let's be mindful of that, okay? The slope of the 30 is way up there. The slope of the 10 is way up there. The slope of the 90 is well out of the Z1 river. And this little surge, I just feel like it's due for a breather. Of course, I would have said that here too, and then surprise, it gave another bump up. So we'll see. That's why we get paid to play. Okay, that's everything I got for you guys. I'll get this processed and posted. Talent LMS has all the updated videos posted as lessons as of yesterday. So take good care. We will see you in the chat room tomorrow.